Alrighty, let me rank the Mag 7 stocks and which stocks I think is going to do best over the next 3 years and which ones I think are going to do the worst. First off, let me say this because this is very important. I say this right at the front, okay? Listen, I'm bullish on the majority of these stocks the remainder of 2025. Like, I'm not a bear on this group. You know, if we're to look at the whole group, I'm not a bear on the whole group for 2025. I'm actually bullish. I actually believe the majority of these stocks you're seeing in front of you, I believe the majority of them will be much higher by the end of this year than they are right now. That's my belief. We'll see. We'll see. Now, let me rank them, okay? The stock I believe will perform the best over the next 3 years out of the Mag 7, this should come as no surprise if you watch a lot of my videos, Metastock. Metastock has been, you know, if we look really at the last, you know, 2.5 years, or we can look at, you know, since the market bottomed really in that October-November timeframe in 2022, Meta's been the second best performer out of these stocks, and by a wide margin. You know, obviously Nvidia's been the best, right? But when it comes to Meta, this is just a very good setup. So we have a forward P here of, you know, low 20s, right? We have earnings per share growth and revenue growth expected to be double digits, and I'm expecting that to continue for years to go in the future. They are a company that's one of the very few that's actually making money from AI, right? And you got these incredible margins at this company. So it's just lovely in regards to Meta, right? And it's a dividend payer now as well, so it's starting to attract the dividend investors as well. So this is why it's so hard for me to take big profits on Meta. I took a little bit of profits at the very end of last year and beginning of this year in regards to Meta, but it's so hard for me to take big profits, even though it's such an outsized position in the public count. And it honestly doesn't make sense to even hedge against it, because what am I going to hedge against? We get a double-digit growing company at a low forward PE, right? And a company that has growth for, you know, a long time to go in the future, that's actually making money from AI and actually doing big stuff there, it doesn't make sense for me to even hedge against it. So Meta, I think this one will be the best performer over the next 3 years of this bunch. Number 2 is Amazon. I believe that's the second best performer of these 7 over the next 3 years. If you look at Amazon, one, the forward P is very low. I mean, you look at Amazon's entire history and look at their forward P, this is extremely low forward P. When we're talking a 30 forward P for Amazon, Amazon's another company, double-digit grower. And the great thing with Amazon is you should see the earnings per share over the next 3 years increase much more rapidly, at a much more rapid clip than you're going to see the revenues increase, which is going to be a lot of fun. And that's really a trend I think you're going to see over the next decade in regards to Amazon. You're going to see an earnings per share increasing at a much more rapid clip than revenue. And the reason being, this company has a lot of room for growth in regards to their net margin. Net margin just under 10%. I think net margins long-term for Amazon are going to that 15 to 20% range. So if we look out 3 years from now, don't be surprised if Amazon's net margins are more in the 12 to 15% or 12 to 14%, let's call it 3 years out from now. So I think Amazon sets up very well, right? And obviously as a position, I have very substantial size in the public count. If you told me I had to go buy, if you forced me to either sell my $217,000 of Amazon stock in the public count or go buy another $217,000 of Amazon stock tomorrow, and I got to hold it for 3 years, or I couldn't own Amazon stock the next 3 years, I would, not even a question, I would go buy $217,000 of Amazon stock to hold for the next 3 years, because I would much rather be on the ride the next 3 years than sell out and not be on the ride for the next 3 years in regards to Amazon. These third stock I think will do the best out of these a bunch. This might come as a surprise to some folks. It's Nvidia. And we'll get into in just a moment why, if I feel that confident about Nvidia, why am I buying AMD stock right now rather than buying Nvidia, right? But when it comes to Nvidia, you know, a lot of it's just been de-risked now at this point in time. You know, Nvidia is now trading at a forward P of, let's call it low 20s, right? And still great earnings per share growth, great revenue growth. Now the stock's having a lot of troubles because of what I told you guys was going to be a trouble spot. And I was talking about this at the back of last year, right? Second half of last year, I was telling you guys, Wall Street's going to have a lot of trouble with trying to figure out Nvidia's 2026 growth rates, and that's going to hurt the stock substantially for quite a while, right? And if you look at Nvidia stock, it's gone nowhere now for 9 months or so, right? And it's because no one knows exactly or has any confidence about where Nvidia's numbers are going to be for 2026. Are we talking a 10% revenue growth company, 15%, 20%, 25%, 30%? No one has a clue, right? But the moral of the story in regards to Nvidia over the next 3 years, once they work through this soft patch, right, I think they'll be fine. At the end of the day, their tech is needed. They got the creme de la creme chips out there. And so they're working through a very awkward time, but it doesn't mean I'm bearish on them. But that leads us to, why am I buying AMD stock right now rather than NVIDIA if I feel like confident? Well, here's why. NVIDIA has their MI350 coming out very, very soon here, okay? Now, what I believe is going to transpire here in regards to AMD is I believe we're going to start to see a much more rapid revenue growth percentage for AMD over the next few years than NVIDIA. What we're going to see in NVIDIA over the next few years is a shrinking revenue growth percentage. It's already playing out, right? It's going to play out even more over the next couple of years. With AMD, it's completely the opposite situation. AMD is going to see revenue growth percentage acceleration. And I believe starting in the second half of this year, 2025, we're not even talking about 2026, 2027. I believe starting in the second half of this year, AMD's revenue growth percentage is going to surpass NVIDIA's for the first time in years. And then I believe it's going to stay ahead of NVIDIA quite substantially for the next 3 years. So that's an important thing to understand about that. Now, additionally, when you look at AMD versus NVIDIA, you can be fooled. You can look at the trailing 12-month PE and think like, oh, AMD looks like a ripoff. NVIDIA looks like a great deal, okay? No, you don't value a stock based upon trailing 12-month PE. You value a stock based upon forward PE and 2-year forward PE, because that's what really matters. So then you look at the forward PE with AMD and NVIDIA, and like say, okay, this is a little bit closer. And so you say, okay, 30 forward PE roughly for AMD, 23 for NVIDIA. Okay, so NVIDIA still looks for like a better deal. Then you go the 2-year forward PE. 2-year forward PE, now we're talking about 18 for AMD versus 22 for NVIDIA. That's where things start to get really interesting. And so, like I said, when we're talking about a 2-year forward PE actually much lower for AMD, and I'm expecting much faster growth rates for AMD in regards to revenue and then earnings per share. Oh my gosh, the margin catch-up AMD has over the next few years is crazy. So that's where I'm at in regards to NVIDIA and AMD. I'm not bearish on NVIDIA over the next 3 years. I'm just much more bullish on AMD over the next 3 years. And I think if we look back 3 years from now, we'll be like, yeah, he was right on. Like, it didn't mean NVIDIA was doomed. It just meant AMD was going to do a lot better, right? 4 stock, I think, is going to perform the best out of these 7 over the next 3 years is actually Google McDougal. Now, Google McDougal is dealing with a lot of government crap right now, looking at their business practices and trying to break up certain things. So that's going to be an overhang on Google stock for the next bit of time, if not for the next year or two, okay? But at the end of the day, Google actually looks pretty good here. Forward P of under 20 for Google, that looks pretty darn appetizing, okay? The fifth stock of these 7 that I think will perform the best over the next 3 years is actually Mr. Softy, Microsoft. I think it looks pretty fair here. Microsoft's a double-digit growing company, should continue to be very stable business, right? Trading at a forward P of 28, 2-year forward P of 24, pretty fair for Mr. Softy. The 6th best of these performing stocks, I think, over the next 3 years is going to be Apple. Obviously the last 2 I'm not very bullish on. I mean, even Microsoft I'm not super bullish on. Apple, a little high here, 29 forward P, 25 2-year forward P for single-digit growth of earnings per share and single-digit growth of revenue. It's okay. And the stock I believe in the least over the next 3 years is Tesla, right? That does not mean I want to short Tesla here. There was a time to buy puts. It's not now, in my opinion, although there might be money to be made there. It's just not appetizing to me as a risk-reward profile. But, and you might say, well, if I'm the least bullish on Tesla out of all these stocks, why would I still own Tesla? It's hard for me to fully break up with Tesla. And I think it's just think back to all the good times we had together. I think that's what it is in regards to Tesla. And obviously I've sold the far majority of my shares. I have hardly anything left. And so I think now at this point in time, it's just more of a ceremonial position in regards to Tesla. But, I couldn't be more disappointed with kind of, how the company's been run, obviously from the top with Elon Musk over the past 3 years. The numbers are pathetic. You know what I mean? Like we have declines in vehicles delivered. Like there's no reason at this stage of Tesla we should have vehicle declines. It's embarrassing. So the company's just been very mismanaged from the top. It really started in 2022 in terms of the mismanagement from the top, and then it's just gotten worse over the past few years. And it just sucks, because it doesn't have to be like that. Like if we had a if we had Elon actually being Elon, oh my gosh, could you imagine our deliveries right now? We'd probably be doing 3 million a year, 4 million vehicles a year. And just, could you imagine where all the products and services would be like versus where they're at right now? It'd just be a night and day difference. But we got a management that's out of office for the past 3 years, and it shows up in the numbers. And that's why our deliveries are literally going down at a stage where Tesla should be growing rapidly year after year after year, you know. Yeah, it's just so disappointing, but it is what it is, right? You know, obviously spoke about this whole situation pretty extensively on the reaction channel called Jeremy Lefebvre Makes Money. Not sure if you guys follow me on there, but I spoke about that pretty extensively in this video right here. So if you want to hear me talk more about that, there you can, right? Now, that leads me to this last point I want to make in this video here today, right? When you're building a brick wall, you want to make sure you do it right, right? And you want to build a brick wall that's going to last decades, maybe even outlive you, right? If you build a brick wall, great. That brick wall should last past your lifetime, right? And that's the same exact approach you got to take when you're building your portfolio. You want to build a portfolio that is going to do well decades to go in the future, if not outlive you, right? And in order to do that, you got to do it the right way. You try to go shortcuts, try to do it and don't really know how to build a brick wall, right? You're going to set up for failure. And your brick wall is going to come tumbling down. You got to know how to do this stuff, and you got to build it right. You don't build it right, say bye-bye to your brick wall, because that just was an illusion the whole time, right? Okay. And so if you need help understanding how to build your brick wall, pin a comment down there, fill out a form, get in my private stock group. Let's take things up to a higher level than where you're at right now, because I know a lot of people have been flustered by this recent, market correction, and they just got slapped. And they're like, oh my gosh, I thought this stuff was easy. I thought I could just do this and do that. And meanwhile, you got people like me that know what I'm doing, and I'm all good, baby. You know, I know what I'm doing in this market. I know where my portfolios are at. I know where my portfolios are headed. No stress at all. Meanwhile, other people are in panic mode because they didn't know what they were doing. They didn't know what they were setting themselves up with. And they have a bunch of stocks that, they lost 50% of their value on, or 60% or 70% or whatever, right? They were messing around with options and margin, all this stuff. And they didn't even understand like basic stuff that you got to understand. That's how you set up your brick wall to fall down, right? Okay. I get through whatever, throw a great financial crisis. We'll get through, 2022 tech bubble, doesn't matter. Like we'll get through it all and it's out to the other side. And then, in those bull markets, we reach new all-time highs, new all-time highs, new all-time highs. But you got to build it right. If you don't build the foundation right, you have no chance in this game, okay? Hey, it's Jeremy. I hope you really enjoyed watching that clip here today. What you're looking at in front of you right there, that's 1000xstocks.com. That's my advanced software that I've been working in the background creating for a long time. This software is so much more advanced than what others are presenting out there in the market. And as somebody that's been in the market 15 years, I want to create something that was simple, that had exactly everything I needed to make my judgments on companies, such as forward P ratios, 2-year out forward P ratios, price to sales ratios, forward price to sales ratios. I wanted the ability to be able to compare different companies versus each other. I wanted to be able to compare a Meta versus a Google versus an Apple and be able to see all those different metrics laid out all next to each other. I wanted a service that I could listen to conference calls right through and even be able to toggle and adjust the speed I wanted to listen to those conference calls. I wanted a service that I could search SEC filings right through. I wanted the ability to do that all in one service, and that is exactly what I've created with 1000xstocks.com. If you want to apply for access to this, go to the description area of this video. You can click that link and go ahead and apply for access to this. If you don't want to do that, you can go to 1000xstocks.com. Enjoy. Let's get into this. Are the Mag 7 stocks doomed for 2025? Look at the similarities here between this and 2022. It's shocking, is it not? Look at this. You've got, Amazon stock down in 2022, 5%. This year, Amazon stock's down 11%. It's worse for Amazon in terms of price performance so far, right? You had Google down 5%. It's far worse for Google so far. Google's down 13% this year so far. It's going worse, right? Apple's having a worse time recently, 14.5% down versus at this time is down 10%. Microsoft was down 10% there. Microsoft here was down 8%. So Microsoft's holding up a little bit better than it did in 2022. Tesla was down 24%. So Tesla's getting hit a lot worse at this point in time, right? Now Meta stock was going through a tough time at that particular time. This stock was down 36%, where Meta stock right now is technically positive, the only green one of the bunch. So when you actually look at it, it looks like it's actually a lot worse here in 2025 for all these companies other than Meta. Meta's the one that is like, the golden child of them all nowadays, right? But I think you have a lot of differences between 2022 and what's going on now, okay? And so I would not, here's another way I'd put it, okay? If you look at sentiment, right? Listen, sentiment was bad in 2022. We know that, right? This is a whole other level of bad sentiment. We have now had 4 straight disastrous sentiment numbers. We're not talking about sentiments just a little, no. This is among the worst sentiment you've ever seen in the history of the AI investor sentiment numbers. The worst in history, folks. They've been doing this survey since the 80s. And we're seeing the worst numbers you've ever seen. Go back to the great financial crisis. Go back to the 2022 crash of the tech stocks. Go back to the tech bubble days. Go back to the, whatever time period you want to look at since the 1980s. We've never seen it this disastrous. 4 straight weeks of bearishness at this level. 60+% were bearish, 57%, 59%, and 58%. So you could look at this glass half full and say, sentiment doesn't get worse than this. Like, this is the worst, right? It can only get better from here. Like, that's a perspective you can take, right? Or, I mean, if it does get worse, like, there's not much worse it can get than this, right? What are we going to go to? 100% of people are going to be bearish on the stock market the next 6 months? Like, these are already ridiculous numbers we're seeing week after week after week after week, right? And in regards to these companies' earnings, I was speaking about this a little bit on the main channel last night. I believe I was going through even like valuation studies in regards to these companies and whatnot on the main channel, right? Financial education. From what I see, do I think these stocks are doomed in 2025? The answer is no. I do not believe these stocks are doomed in 2025. I think they set up actually very well for the remainder of this year. And I wouldn't be surprised at all if almost all of these stocks are substantially higher by the end of this year than they are now. Now, what could be the one thing that could screw things up here? I think is if you had a full-blown massive recession, right? 8-10% unemployment, great financial crisis type numbers, major stock market crash. Obviously, like, that's the one wild card that you could say, okay, Mag 7 doesn't finish the year green from here and it just goes down more, right? And we have a 2022 type year. But even I don't see these stocks going down to those 2022 type levels or anywhere remotely close. So I also have to be very clear about that, right? If you think you're going to get Meta stock at 88 again, like, dream on. You're not, okay? Or anywhere remotely close to that. Or most of those stocks. Like, you're not getting NVIDIA back to the prices NVIDIA was back in 2022. The best case scenario, I think, is those stocks had like 10% more downside by the end of the year, but I think even that's a low probability. So don't be surprised if the majority of Mag 7 is, let's call it, above where it is today. And a few of those stocks will be likely substantially above where they are today. That's my personal opinion on that. We'll see how it all shakes out in the end, right? Now, when it comes to Adobe stock here, I've been thinking about this one, looking at it recently and considering, like, is this a stock maybe I'd want to buy? I've been looking at this one, been looking at Trade Desk a little bit. Trade Desk is a little bit harder one for me to figure out exactly where their business model is going over time, so I'm still doing work there. Adobe's easier for me to wrap my head around. Their latest income statement was an A- income statement here. Very good numbers. Total revenue went to $5.7 billion from a little under $5.2 billion, right? Gross profit went to almost $5.1 billion from about $4.6 billion in the same quarter last year. Additionally, they didn't have a one-off acquisition termination fee to deal with in this year, right? So operating income went to $2.1 billion. And if you look at their net income, went to $1.8 billion, diluted EPS $4.14. So numbers are great in regards to Adobe, right? Now, also, Adobe stock hasn't been the best this year. It's down over 12%, but that's pretty normalish performance. Like, look at where all the big dogs were we just spoke about. Microsoft, Amazon, NVIDIA, right? Google, McDougal, Apple. Like, Adobe's right in performing. It's not like there's something in Adobe's stock price that makes you think, like, this company's doomed. Like, oh, no, it's kind of performing right what in the range that you would think, right? Now, the thing I worry about it with Adobe is AI, right? And the more I've gone down kind of the rabbit hole here in regards to AI and understanding Adobe, the more I've realized AI is a risk to Adobe. Yes, like, there's a lot of new picture applications, video applications that, pose a risk to disrupting Adobe in respect of some of Adobe's product suite not being as relevant to maybe some new folks that are getting into business and whatnot as previous generations. With that being said, I've also come to the realization that AI is also an opportunity for Adobe, and it's also an opportunity for Adobe to make way more money. So ultimately, AI might end up just canceling out for Adobe, or maybe it's a slight positive, slight negative, but it might not have as grand of, an effect as people think because of both sides of the story, right? There's a risk to it, but there's also a reward potential here. So they might end up canceling things out. Now, in regards to the CEO of this company, he's a beast. He's been running this show since 2007. And, who knows how much longer he'll lead the company. I don't know if he's going to lead it for another, 3 years, 5 years, 10 years. I don't know. But as of right now, he's a very, very great CEO. You look at the stock since 2007. This is an 18-year history here. The stock's done amazing. The stock's up 900% roughly since 2007. Listen, if I can invest in a stock and make 900% on my money over an 18-year span, I'll take that all day, right? It's more fun if you can make it in 2 years like we made with Palantir, right? But at the end of the day, if it's a situation where I can make that over 18 years, I'll take it. It's just a great ROI. Inflation's not that bad that everything got 900% more expensive over the past 18 years. That's not the way it works, right? So the bottom line is Adobe has outperformed. You can make an argument that Adobe over the past 18 years has outperformed 99% plus of assets, right? If you think about in 2007, all the assets you could have invested in 2007, right? Real estate in New York City, LA, my city, Vegas, Phoenix, doesn't matter what city it is, right? You think about all the stocks that were in the stock market, right? Crypto wasn't a thing yet, so that you can't even compare it to that. You think about gold, silver, all the different commodities. You think about everything across the board. This asset likely did better than 99% plus of assets over the last 18 years. There's something to be said for that, and that's a great CEO. So that makes you feel pretty comfortable. Now, I will say this, and this is important, we state this, right? The stock since November 2021 is down over 40%. So Adobe stock has been in a crash now for over 3 years. We're coming up on 3.5 years of this stock being in its own crash, right? So clearly, but here's the thing, okay? You got to understand the way Adobe used to be valued, because Adobe used to be valued at very high forward P, very high trailing 12-month P. And so I'm just telling you, people that were investing in this stock in November of 2021 were investing in the company at very high P ratios, and they paid the price for that. They had to learn that valuation matters, right? Because as soon as there's any worries that go on with the company, this and that, boom, next thing you know, the stock's hit hammered, right? And that's exactly what we've seen. And so if you invest in this company back in November 2021, you're looking at a 40% loss. Now you could say, well, I averaged down over that time. Okay, maybe you're at a 20% loss or still, but still, that's not fun over 3.5 years. That's not fun to be down, even if it's 20% or 30% or something like that, right? Now, the balance sheet also in this company, very good. Cash and cash equivalents, $6.7 billion. Debt, $6.1 billion. It's obviously a cash flow machine. It's a profit machine. I mean, you looked at the net income in this latest quarter, what was it, $1.8 billion? So the company just has this massive influx of cash continually coming in every 3 months, right? And they can use that money on share buybacks or dividends or all sorts of things, or just building up the cash balance, making a bunch of interest income. So there's a lot they can do here. So the company has a very good balance sheet and honestly, they have a pretty dang great balance sheet, and they have a great income statement as well. Now, when you look at the valuation of this company, the great thing with Adobe stock now is you're not paying that super high valuation you paid when you were buying the stock, let's say in November of 2021, right? Back then, look at where Adobe's P's were at back then. You don't have that problem now. Forward P on Adobe now, 19. That's roughly a market multiple, maybe even a little bit below. And for a company that's probably going to have much better growth than an average stock in the stock market, with a balance sheet and income statement that's much stronger than an average stock, with gross margins of pushing 90%, with net margins of 30%. So is Adobe stock a buy here? If you told me I was forced to either, would I buy, let me just put it this way. Would I feel comfortable investing money into Adobe right now? And let's say I had to hold it there for the next 3 years. The answer is yes, absolutely. I'd feel comfortable doing that. So Adobe's on my radar, might be a stock I buy. I'm going to put it on my watch list for potential buys here over the next few months. Because right now I'm in a phase of figuring out what are the next stocks I'm going to be investing into, right? Because this previous generation of stocks like AMD, Nike, these sorts of stocks I've been putting a lot of money into the past few months, I'm almost wrapped up with my buys in regards to those stocks. I probably have, my guess is I'll buy those stocks for another few weeks here, another few months. And then I'm going to be done buying those stocks. And then those stocks will be just a hold for me. Estee Lauder is another one of those, right? Elf, all these stocks that I've been putting a lot of money into last few months here, those ones are going to conclude in regards to my buying, and they'll conclude in the next few weeks and next few months. And then from there, I start focusing on the next generation of stocks. So that's why I'm doing all this research work, trying to figure out what's the next generation. That's why I'm looking at the trade desk right now. I'm looking into Adobe and some of these other companies and trying to figure out, okay, what's the next generation of stocks I'll be buying, right? Because the AMDs and Nikes, I got big positions there. They're almost done. Not quite yet, but almost done. I always want to try to wrap up my buying in regards to stock before it starts its next big run, or right around the time that it bottoms out and starts making that next big run, essentially. So, that's what's going on there.